Next Wednesday, July 20th, Tesla's Q2 earnings results are going to be released. And despite many people expecting Tesla stock to suffer from lower quarterly deliveries due to the Shanghai Gigafactory shutdown as well as supply chain constraints, I actually believe that this quarterly result will be the catalyst that will send Tesla stock to $800 plus a share. So make sure you stick around to the end of the video so I can show you guys exactly how I came up with this conclusion. And as a bonus, at the end of the video, I will also be sharing with you guys my end of year price target for Tesla. So as many of you already may know, Tesla has actually already released its Q2 production and delivery results on their investor relations page on their website. The reason this information is so valuable is we can actually use these metrics on top of past earnings reports to help us quantify what we might expect for Q2 earning results. So to do this, I've went ahead and built a spreadsheet that we're going to be able to plug in this information that I'm talking about, and then we'll be able to go through it together and I'll be able to show you exactly how I'm coming to the conclusion that Tesla could be worth $800 a share after this earnings report. So what you guys are looking at on screen right now is exactly what I had told you about earlier, where Tesla has already released their production and deliveries for the Q2 of 2022. And as we can see down here in the deliveries category, Tesla has delivered a total of 254,695 vehicles in this quarter. So let's go ahead and start here with our data entry and enter in the amount of vehicles that we have delivered in Q2 according to their investor relations website of 254,695. So now that we have this information, we need to be able to try and quantify this into what we might expect for automotive revenue. And the way that we're going to do this is we're going to use the revenue per vehicle that was delivered in Q1. So basically, if you took the automotive revenue and divided it by the total deliveries, that's going to give us our revenue per vehicle delivered, right? So as you guys can see here, the average for Q1 was $54,381.90 per vehicle. And now because we have these two figures, we can actually already estimate what our automotive revenue is going to be for Q2, which is going to be $13,850,798,020.50. Now that's a damn mouthful. So now we need to estimate where our solar and services revenue are going to come in for Q2. And the way that we're going to do this is by taking Q1 solar and services revenue, and then we're going to use historical growth rates to give us a projection of what to expect for the solar and services revenue for Q2. So we're going to go ahead and enter in right here the solar and services revenue for Q1. So as you can see over here, the solar and services growth rate for revenue usually runs at about 8.6%, or at least it averages at 8.6% for the last 5 quarters. But to be conservative, due to supply chain constraints and other issues that Tesla may have faced this quarter, we're only going to use this at 2%. And now as you guys can see down here, we have our estimated solar and services revenue at $1.932 billion. So once we combine the two different segments of revenue, we have a total revenue for the quarter of $15.783 billion. So now that we have total revenue, now we need to try and figure out what our gross margin is. And the way we're going to do this is by starting with automotive margin. Now in Q1, the automotive margin was 32.9%. And I feel like we're safe to use that same margin number due to the fact that actually in this quarter, we had a larger percentages of S and X's sold over the 3 and Ys. And for those of you that aren't already familiar, the S and X are actually higher margin vehicles. So yes, even though we sold technically less vehicles throughout the quarter, I feel like we have the chance to maintain this 32.9% margin in our automotive sector because we sold more of the high margin vehicles throughout the quarter. So the spreadsheet conveniently does the math for me on that, and that's going to leave us an automotive margin of $4.556 billion. So next we need to figure out our solar and services margin. And if we look over here, you can see that over the last 5 quarters, if we average it out, we've actually been taking a loss of about 4% on our solar and services. So that's going to equate to about a loss of $77 million off of the gross margin. So now that we have both of these margin numbers, this sheet's going to give us our total gross margin number right here, which you can see is $4.479 billion, or in other words, 28.38% gross margin. So now that we have our gross margin, we need to account for OPEX, interest income or loss, as well as any taxes that Tesla might have to pay throughout the quarter. And if we look back on the average of the last 5 quarters, that usually runs at about 14.33%. So again, the sheet does convenient math for me, and that tells us that we're going to have an OPEX, interest income loss, and taxes expense of about $2.261 billion for the quarter. Now, simply all that has to happen from here is we minus out that OPEX, interest expense, and tax from our gross margin, and it's going to spit us out our net margin, which is right here at $2.217 billion, or 14.05% net margins. And now that we have our net margins, we're going to be able to figure out our quarter 2 EPS by simply taking our diluted shares outstanding divided by our total net margin. And what that actually comes out to is, as you guys can see right here, is a $1.92 EPS with shares diluted for Q2. And now that we have our Q2 EPS, we can actually plug that in to give us a new 12-month trailing EPS estimate. So as you can see up here in the actual formula bar, you can see that our previous quarters were $1.44, $2.05, and $2.87, and now we're adding in the $1.92 EPS that we have from Q2 to bring us to a new 12-month trailing EPS of $8.28. So why is this new 12-month trailing EPS number so important to get? Because now we can take what we're trading at as far as a 12-month trailing PE multiple, and we can times that by that new 12-month trailing EPS to give us a new price target. So if we scroll down, I've done exactly that. And as you can see, if we take these two figures, which I'll highlight the formulas of timesing our new 12-month trailing EPS of 828 by our current 12-month trailing PE of 97.72, that is going to give us a new stock price of $808.82. Or in other words, we have a 12.3% upside if we hit these projections. Now, obviously, since we're talking about the stock market here, we can't assume that it's going to go to $808 a share on the exact day that the actual quarterly results are released, but this gives us a very good idea of where the stock could start to rally to if we do wind up hitting these estimates. So to add a little technical analysis cherry right on top of this fundamental analysis, if we hop over to Webull, we can actually see that Tesla has now been trading in this upward ascending wedge pattern, which is a really good pattern for it to be doing, as it's done it many times in its history, usually leading up to a rally, like we can see back here. We've done this pattern before to then usually wind up having a nice rally thereafter. Not saying we're going back to 1200, but would it be entirely possible for us to get a good earnings report like this and then see a nice breakout out of this upward wedge pattern and possibly get back up to that 808 that we're talking about? I personally think so. So as a Tesla investor, needless to say, once we got this production and delivery report, I have been adding pretty heavily to my Tesla position to where now I actually have tens of thousands of dollars invested in Tesla stock. So I'm pretty excited for this coming up earnings report. Now, as I promised you guys, I'm going to go ahead and show you what my end of year price target is for Tesla now. So hopping over to this sheet where I can actually show you guys my end of year price target for Tesla based on delivery. I know it looks kind of complicated, but in reality, it is the same type of formulas as we used over here on this smaller Q2 earnings estimate sheet that I had laid out for you guys, so it would be easier for you guys to kind of see how I'm coming to this conclusion. But coming into this sheet, you can see that I've plugged in on this line with the purple boxes basically what I'm estimating deliveries to be. And then over here, it totals up what the total 2022 deliveries are estimated to be. And for me, I expect Tesla, as far as what kind of projections we have right now, I'm expecting Tesla to deliver 1.364 million vehicles by the end of 2022. Keep in mind that my price target is all based around us being able to hit 1.364 million vehicles delivered by the end of 2022, which right now I think is entirely possible. So I'll go ahead and scroll down to the bottom line here where we get our price targets. And as you guys can see, I have everything from Q1 to Q4 all estimated out right here with our price targets. So as I said earlier, our Q2 is right here around 803. Our Q3 I'm estimating at 942, and Q4 end of the year price target I estimate to be $1,063.36, which would be a 47.65% upside in Tesla stock between now and the end of the year. So anyway, guys, that sums up my expectations for Tesla's quarter 2 earnings results, as well as what my end of year price target is for Tesla stock at this current time. If you guys enjoyed this type of detailed stock analysis content, make sure you hit that subscribe button down below, as I'm going to be doing much more of this type of content here on the channel. Also, if you wouldn't mind hitting the like button down below, it would help this video find more people just like you that are going to enjoy this content as well. So until next video, guys, peace.